My guest today on Remarkable Regional Business is Nathan MacPhee from IIF, the founder and CEO. Whoa, this episode has no downtime. Like, it is just jam-packed with Nathan's story of growing IIF. IIF stands for Invest in Your Farmer, and their mission is to put a farm in every pocket. Just all I can say is strap in, because if you're at all interested in agriculture, in the startup ecosystem, or in investing, then you're just going to be mind blown. Like, think of your favorite episodes of this podcast, and this one will be right up there. I guarantee it. I won't take any more time away from Nathan and our conversation together. Let's get into it. Nathan MacPhee, thank you so much for joining me in the studio. It's an honor to have you here, mate.
Pleasure. Thank you, Caleb.
I can't wait to dive into Invest in Your Farmer, and you said just off air, we'll refer to it as IIF. I can see you on the merch, and it's on everything, on the app and everything. It's IIF, and we'll dive into why that is in a second.
Yep.
And then we'll unpack your journey to here. But I'm excited, man, because you are the first ag tech founder that I've had in this studio and on the podcast. So how cool is that?
I'm honoured.
Mate, tell me, what is IIF?
IIF, we essentially enable anyone to invest in agriculture without owning a farm. And so someone living in the city can literally buy a cow on someone else's farm. A small cow that in, say, a year's time will be a bigger cow and ready for market. Yeah. So you invest in when it's young. The farmer grows it out, sells it when it's a little bit older and it's ready for market, and hopefully you can share in the profits. We don't just enable people, though, to invest in livestock. You can invest in crops before they've sown, or fruit before it's been grown, or even oysters in a river. So essentially a consumer, someone who has no connection with farming, can build what is essentially an investment portfolio. But instead of having stocks and bonds and property, you have livestock, oysters, apples and wheat.
That's amazing. So it's like micro investing. It's a micro investing platform. Is that how you would?
Yeah, it is an investment platform. The difference is we're investing into real assets, not financial assets.
Love that.
And so you can build a really diverse portfolio, earn and learn, as we say. So you're going to stoke a real interest in farming and agriculture.
Yep.
Because for the first time for a lot of people, it impacts them, both financially and emotionally.
Yeah. Yeah, it's pretty wild. So is this a thing that happens, there's a massive booming market for platforms like IIF, or are you paving the way here?
Well, IIF is truly a world-first approach to investing in agriculture.
Whoa.
There has traditionally been ways to invest in farming, but it involves buying and owning a farm. So traditionally you invest in the farm. For the vast majority of people, that will never happen. There's huge barriers to entry for farming and agriculture. Typically there's only two ways to participate. You either inherit one through succession, or we typically see people get very wealthy and then go and buy farmland for fun. But for the average person, what we think is quite profound is that it doesn't matter who you are, whether you're walking down the mall of Bendigo or you're in central Melbourne, every single person needs food, fibre, and therefore farmers. Yet 95% of the population have got no idea and no ability to participate. We've essentially decoupled investing in farmland, which is a long-term capital commitment, and to investing in what farmers grow. Wow. So we invest in agricultural production separate from the land, which means we don't compromise land ownership for farmers. We don't lend money to farmers. We literally enable someone using their phone to become farmers.
That's crazy. All right, so let's break this down a little bit, right? Because there's so many questions, right? When you present it like that, the first one is, how on earth is that even possible? What is the nuts and bolts behind connecting? You're the bridge, right, between a everyday person and the farm, production on the farm, and the return, investment in a potential return on that. So what's the in-between? How do you enable that?
Yeah, well, essentially we are a marketplace. And one of the biggest challenges we faced is there was no playbook. There was no set of rules to enable us to do what we wanted to do because it had never been done before. So we had to the hardest thing we had to do, and it took the better part of a year was to work out how do you solve the legal and tax complications in order to do it. I feel myself blessed in that I came from several decades working in financial services. So I understood financial services regulations and structures. So I had a little bit of a head start knowing that what exists out there today wouldn't work for what we wanted to do.
Wow. And so what did you do?
Well, firstly, I mean, if I go back to the original genesis of the idea, if you're interested in Caleb. As I said, my background's finance. And when I say financial services, investments, superannuation, stockbroking for a number of decades. I was really lucky. I was the CEO of some really great companies, and I've worked across Australia and internationally. I was based in Sydney for a long time, and really after over a decade living there, got tired of what we'd consider the rat race, and moved to regional Victoria in Mansfield about 6 years ago. For my sins, I continued to commute to Sydney every week. So I'd fly from Mansfield to Sydney on a Monday, fly back on a Thursday or a Friday, be home for 2 days and then go off again. Needless to say, I kind of tired of that after 2 years. And
if living in Sydney wasn't tiring enough, like living in Mansfield and commuting to Sydney every week, that's another level.
And coming into September, it was a curse because the grass doesn't stop growing and you've got half a day of mowing every weekend on our sort of acreage. So I continued to work in financial services before I decided I didn't want to do that. And we were on a family holiday, and I said to the wife, I just don't want to go back to work. And she said, quit. I said, I can't quit. I've never quit anything in my life. What do you can't do that? She said, why not? But then she didn't push me on it. But once that thought was sown, I thought, I don't want to do this anymore.
Wow.
I achieved all of my objectives in finance. I'd been a CEO since I was in my late 20s for some pretty large companies. And it was, I might call it a midlife crisis. I don't know what you would necessarily label it. But I did leave my job, and that was right before COVID hit.
Wow.
So I actually had close to the best year of my life because I had no responsibilities at all beyond being what I'd call homeschool principal.
Yes.
So I just took care of the kids, helped them study. They were both in high school at the time. Wife was an essential worker, so she worked every day, unlike in the old days that I did. And I had a great time at home before, I suppose, reality set in. And I thought, okay, I'm going to have to get a job again. Can't live on this forever. Do I put a suit and tie back on and head to Melbourne? I like Melbourne as a city, and I could always resurrect a financial services career. But then I thought, I don't want to do that. And I thought to myself, we live in a rural area. We're surrounded by farmland. And I thought I wouldn't mind being a farmer. I thought I'd be able to do it before the reality set in that I didn't have enough land, and I wouldn't have enough land to farm commercially. And actually, that's when I thought, well, if I can't buy a farm, what if I could buy a cow? Just a cow on someone else's farm. Because looking at it from a financial perspective, and a cow's a pretty appreciating asset. You buy a small one, you double its weight, you almost double its value. And I actually knew from my wife's side, who was multi-generational cattle farming, that when times got tough, they sold cows, and often at the wrong time. Often when they wanted to keep them, but they needed the money. And so I thought, well, is there an idea for me to invest in cows on someone else's farm? The farmer gets paid up front. They don't have to wait another year to get paid. And if it's a good season, they'll get paid again. So that was just a thought bubble I had. Can I build an investment portfolio of livestock?
Wow. That's crazy. So from the genesis of that idea, like plenty of people have great ideas, but there's a lot of great ideas still floating around in the ether. What was your pathway and instigator to actually making this thing a reality?
Well, early on, it was just really incremental. The first thing I thought, when I looked at the numbers, I looked at the figures, and I started to research the industry, I thought that it was a real opportunity to, I suppose, enable consumer participation in it. I had no idea how I was going to do it. I knew I had to start talking to farmers just to really validate, is there a genuine problem I'm trying to solve here? But before I did that, I didn't want to make a fool of myself, so I had to learn as much as I could about cattle. So I did a certificate in livestock management, And that was just a self-paced during COVID. I learnt some fundamentals, lingo, so I could, again, carry conversation. And then I started to talk to farmers about, their business, their operation. What does it look like from a risk perspective, an income and cash flow perspective? And very soon realized that it just validated the challenges farmers have, that even though at this time I was really focused on cattle, a farmer will raise an animal for 12, 18 months before they get paid. And if you step back from that, you look at farming in general, it doesn't really matter if a farmer's growing cattle, oysters, apples, or wheat. All farmers grow things. They don't get paid till they harvest and sell, and they take all of the risk along the way. So whilst it's a fulfilling journey for farming, it's a really difficult one. I mean, I'd say to people, could you imagine working 3, 6, or 12 months and having no idea how much you're going to get paid? That's the reality of a farmer. You sow a crop in April and then you're hoping in November, December, you're going to harvest a good one, and you hope that in January, February, you get a good price. So it's quite extraordinary. So, I started conversations with farmers, trying to understand it. And they generally validated the challenges they face with cash flow, but many were content, said, hey, this is how it's always been. Yeah. And my view is, well, does it have to be? I was still sort of looking through the idea there. I went to Beef Week up in Queensland as well, and participated, again, just really to learn more about cattle and learn more about the industry. And I was watching some industry sessions where you had industry leaders talking about the pathway for agriculture, and that it's an industry that's on its way to $100 billion, and I know that that's something the industry is quite proud of. And they were talking about how they were going to achieve this and how much money they were going to need. And typically the people on the panel were saying, well, we'll get the super funds to invest in this industry. And I thought, that's not going to happen the way you think. I've worked in this industry for a long time. It's too risky. It's too volatile. It doesn't align with their objectives.
Wow.
So I stopped. I saw the president of the National Farmers Federation, who was on this panel later in the day, just walking along. I stopped her. I got a little brave and thought, Fiona, I want to share something. I saw your panel. I love what you were discussing, but do you really think the super funds are going to invest? Because I'm skeptical. But I've got an idea for consumers investing. It was a very cattle-centric idea back then. Hadn't really gone anywhere, still in a research phase. And she said, that's really interesting. That aligns with our objectives. But have you thought about things beyond cattle? There's a big industry, ag's huge, it's diverse. Have you thought about other areas like cropping and hort that have a dire need for capital? And so I walked away going, okay, so she's kind of validated my idea. I still don't know how I'm going to do it, by the way. But she's broadened the whole scope. So I've gone in going cows. I'm just going to invest in cows. And then my whole mind's opened up to what else is in agriculture. And then fortuitously, I was introduced to what became our first farmer, who was not a cattle farmer, who was an oyster farmer.
What? That is so random. Like, when I think agriculture, and I would say most people think agriculture, they're thinking cropping or cattle. How did you get introduced to an oyster farmer?
Oh, it was actually a friend of a friend. Yeah. When I was talking about my idea, he said, do you want to talk to an oyster farmer? And I thought, why not? Yeah. And I was lucky enough to get introduced, and we're still very close today in terms of business associates, to a really entrepreneur guy who actually now lives in America. And I was explaining my idea to him, and he stopped me pretty quick and said, dude, you can do this in oysters. I was like, oh, okay, cool. He goes, it takes 2 years to grow an oyster, a Sydney rock oyster, for marketability. Again, the farmer carries the risk. And it was almost this time of, let's say, nearly 3 years ago. Yeah. And we were coming out of winter. And for an oyster farmer, winter's not a great time. The oysters are in poor condition, demand is low, and prices are subsequently low. So their cash flow is struggling. And so we actually invested in, at the start, 6,000 dozen oysters. And I had about half a dozen friends who I said, hey guys, do you want to invest in these? And they went pretty quick. And then that was all we had really done. And we waited until about the end of that year, November, December, until the oyster farmer harvested them and sold them. And because at November, December, you're coming to summer, conditions great. The demand is high, prices are higher. So we bought them for, say, $10 in the middle of winter. Farmers sold them about 3 or 4 months later. It was a pretty quick turnaround for $12. And you think, okay, $2 profit, we split that, investor got 80 cents. Now, you might think that that's really pretty lame, 80 cents in return. But 80-cent return on a $10 investment is an 8% return. Ooh. And if you earn that in 6 months, it's a 16% annualized return. And so we did that once. And the farmer was really happy because we helped them get through a challenging period. Our investors were crying out saying, can we do it again? Can we do it again? And we thought, hang on a minute. By that stage, we'd also invested in our first 2 or 3 cows. So tiny, a very small number of steers. And we were just following that through. And we thought, hang on a minute. We can do this in cattle. We can do this within oysters. We need to work out where else we can do this. And so we set ourselves an objective and said, can we invest in a crop? So can we invest in a crop before it's been sown? And we actually invested in a rice crop in far north Queensland.
Really?
Yeah. And then we also invested in some apricots near Cobram. And we thought, we don't need to do a lot of this. We just need to do it once or twice. And by that stage, we had sat there and said, okay, we've proven we can invest into and out of oysters. We've proven we can invest into livestock. We've proven we can invest into a crop. And we've proven we can invest into fruit. And then we stopped and thought, this is working. It's very small scale, by the way. We're probably only moving tens of thousands of dollars at this point in time. But it was small scale, but the farmers were getting value and the investors were asking for more.
Wow.
And so we thought, okay, we're going to have to do this for real. So we're going to have to work out how we're going to do this for real. So you can do it on a small scale. How are you going to do it on a large scale?
Yeah, because the vision wasn't just, make a good return for you and your buddies. Like you had this vision of impacting farming and enabling connection from a non-farmer to invest and get a return from farming. So your vision is much, much bigger. Connect the dots for me. How did you get from small scale to what IIF is now?
Yeah, well, our vision is to put a farm in every pocket and make that a really rewarding and engaging experience. And by doing so, we're actually building a connection between the producers and the consumers for what is, I said, a vital industry. And then when we look at farming, farming, and this could be contentious, farming is profitable, but it's incredibly volatile. And that just means, because there's not a lot of industries you can put $1 in the ground and pull out 2. That's what happens in farming in a good season. It's just so every second or third season is not a good season. And so you put $1 in the ground and you only pull out 50 cents and that hurts you the next year. And so for us, we thought, well, how can we potentially capture some of that profitability, but then manage it through traditional risk management techniques that apply for in the investment spaces, which is where I'm from. We were very clear early on that we didn't want to take anything from a farmer. We're not here to take the farmer's profit. We only earn a profit when the farmer does, and we shield them when they don't. Wow. Because farmers notoriously have to live a thriving and surviving cycle, and we're really just looking to smooth that. And so we also knew early on that if we were just going to pool it all together and stick it in a boring managed fund and sell it through financial planners, which is, again, my old background, it wouldn't have the same impact that we wanted to have. We wanted to drive both an emotional connection and a financial connection with consumers. And so when we were looking at from a legal and tax perspective, we sat back and think, well, how are we going to do this legally? How are we going to do this at scale? How are we going to ensure we can comply? We ended up raising a little bit of money, only about $100,000. So tiny amount. Well, I'm very respectful of capital, so I wouldn't call it a tiny amount. And the vast majority of that went straight to legal and tax advice. Ooh. And we said, how can we do what hasn't been done before? Knowing that the advice is going to come in saying, just go and create a managed fund product and sell it like every other one. And I'm saying steadfastly, no, because that won't have the impact that we want. Yeah. And so we knew also that we were investing in real assets, physical assets, not financial assets. Yeah. There's a real difference between investing in a stock or a property or derivative or something like that and investing in a cow or apples. And so the structures don't exist to be able to do it. We knew that we had to create, like farming is a business. We knew we had to create a business that enabled us to create almost micro farmers, dealing, as I said, in physical assets. And we stumbled across a unique structure that's been around in agriculture for a long time, but we use it in a very, very different way, and that is a cooperative. So co-ops have existed for hundreds of years, primarily for farmers to aggregate for mutual benefit, to reach consumers. That's what a cooperative is.
Yeah.
We created the co-op for consumers to become farmers. And so we understood, we investigated, well, what does that regulatory environment look like? And essentially, we then went on the path of creating our own co-op, which would be certainly one of the fastest growing cooperatives in Australia. We have thousands of members. And essentially, you have to be a member of the co-op to participate. That's a regulatory requirement because we're really undertaking what we call share farming programs for our members. Every member chooses their own adventure. Every farm is unique. We don't do it. We basically buy, hold, and monitor the assets for you. But the members of the co-op use our app to say, hey, buy me that cow. Oh, I want 2 lambs and I want 5 apple trees. And so everyone's farm is unique. We oversee it. We provide updates to everyone. So if you invest in a crop, you'll get photos and videos as it starts to emerge and grow and harvest and sell. Same thing if you invest in a cow. There's a real cow at the end of that. It's pretty well got your name on it, owned by IIF on your behalf.
Yeah.
And so we started off quite slowly once we had the co-op in place. It took quite a while to get that done. And we set ourselves a little bit of a growth objective, which we actually smashed, and we had to stop growing. We had to pause all of our marketing, and even though we were doing very little of it, because we grew too quickly.
Wow, that just says so much about the desire and the demand and the strength of the concept, right? And for those who haven't got it quite sold on the traditional co-op structure, it's like I'm going to test my knowledge on you, right? And you tell me if I'm right. You say you do a beekeeping co-op, right? And so there's a whole bunch of beekeepers. They get together, and instead of going out to farmers market and just selling their own product, they pool all their product, and then at every little farmers market that they're represented, they're selling all of the product rather than individually selling their own. Is that what a co-op is?
I think that's a good example of a co-op,
Okay,
but
right.
they can be far more diverse than that.
Okay.
A co-op's just simply a company that instead of having shareholders, it has members.
Right.
And those members have equal representation and rights. So it's an entity, but it's traditionally been used in agriculture where, you're a whole group of small farmers, or in your case, beekeepers. They aggregate to do things together. And
Right.
their contribution is usually recognised in how much money the co-op makes. And so it's just what's considered a very democratic and equitable company, because if you had it as a corporate structure, the biggest farmer would have the biggest say. In a cooperative, regardless of your size, everyone has an equal say.
That's cool.
And there are also different set of rules and regulations that apply to cooperatives that apply to normal corporations.
Yeah, right. So that entity is really set up to help the members of the cooperative team up, I suppose.
Exactly. And that's what we do. So we have thousands of urban farmers, and because each of them wouldn't be able to go out and buy a cow by themselves, and funnily enough, the bigger challenge we're trying to solve early on was around tax, because you can go buy a cow, you got to pay GST on it. When you sell it, unless you've got an ABN, you can't claim GST back.
Yeah.
And that creates what I would consider a pretty big return leakage.
Yeah.
And so the co-op is a company with its tax. It handles all of the tax. So it buys that cow for you. It holds that cow in its title for your benefit. And there's no tax implications because the co-op handles all that for you. So you're essentially borrowing that company for $50 a year to do all of those things on your behalf. And
Wow.
something that I'm most proud of with our cooperative today, Caleb, is that our co-op is the most diversified farming company in Australia.
Wow.
And we own no land. We
Yes.
collectively, we've invested into millions of oysters, thousands of sheep, goats, pigs. Our livestock, our cattle portfolio goes from Brangus in Queensland to Wagyu in Tasmania, and cattle on feed into New South Wales and Victoria. When we think about cropping, we've invested into wheat and fodder and canola and hemp crops. We've invested into wine grapes and apples and avocados, pumpkins, melons. It's, if it grows and it takes time and there's uncertainty, we'll invest in it.
Whoa.
And we enable people to buy really small components. So, for instance, we've invested in tens of thousands of bags of ginger. and an individual can buy one for say $40.
Yeah.
You don't have to go and put $50,000 into something. In fact, we discourage that because we're really focused on people being able to diversify. So you say, I want to invest in some bananas in far north Queensland, and I'll have some blackberries in Tasmania. Now, that's diversified geographically and sectorally. Yeah. So if something bad happens in North Queensland, you've at least got something in Tassie.
Love that.
So because you can spread your risk and you can take the risk profile that a farmers would normally struggle with for a long time.
Wow. That is honestly blowing my mind at the scale of what you're able to do there. But the thought of being able to diversify in that way and spread the risk out but doing it in this way, it's just like, wow, this is wild. So how much where are you at in IIF's journey? Like, or what is you said just before you had a challenge, you had to stop growing, right? Because the demand and the interest was so high. Tell me a little bit about the challenges in growth.
It remains challenging to this day. Growing a marketplace is probably more difficult than growing most businesses because you have to manage two sides. You have to manage supply and demand. And you're really trying to keep as close to equilibrium as possible. So, for instance, if we had too many farming opportunities or too much value and they didn't get bought out by our members, we'd be letting our farmers down. And conversely, if we had a lot of investors or members and they didn't have enough chance to buy, then they would be upset. So it's really like in our first periods, I think it probably took us 18 months to do our first $1 million of investment. Didn't even take us a month to do the last.
Whoa.
And I think also on scale that it took us 18 months to do our first 1,000 investments. In other words, individual purchases. It took us 7 days to do the last. But I break those that 3-year journey almost into single years. So the first year, the challenge was legal and tax. Yeah. We had no idea how we were going to do this. And so we really, I'd spent a lot of time reading Corporations Act and legislation and engaging with lawyers to understand exactly how we were going to do it. And then once you know how, you've got to implement it. And that takes time. And then we were, okay, well, now we've got the structure in place. We've got to start to grow. We set ourselves a goal of hitting 1,000 users within 12 months. We hit that in 5. And then we were like, we couldn't keep up with supply. And so we knew our members, our investors were starting to get frustrated. It didn't matter how much we threw at it. People were just buying it. And we were like, oh my God, we got to stop growing. We don't have, at that stage, we'd raised a little bit of money from venture capital, very small amount. And we wanted to hit that 1,000 users within a year and start to build the processes and the systems to scale.
Yep.
We knew if we built a business around moving paper, or very manual, archaic processes or through people at the problem, we wouldn't be able to scale it. So we've always been highly efficient as an operation. Doesn't matter if we do 100 investments or 1,000 investments. The difference to our workload is between 5 minutes for 100 trades and 7 for 1,000. So incredibly scalable. But then we had the challenge of we don't have enough resources. We only just put our first farmer salesperson on last month, and we've worked with farmers in every state of Australia and every sector you could ever imagine without a sales team. But we knew that we had to get those people in place. And then I think the biggest challenge I faced early on, once we'd sold legal and tax, was how are we going to raise venture capital for an idea that hasn't been done before and doesn't have precedence. The Australian venture capital industry is pretty hard to navigate. It's not easy for ideas to get supported, especially if that idea doesn't have precedence. And so that was actually quite difficult for us to raise money for what would be an unproven idea.
And just pause there. So help me understand what the venture capital, what were you asking for investment in? Like, what was that requirement for scale in infrastructure, people? What were you looking for there?
Yeah, really people. Yep. So the first 18 months was really me and a few other people helping out sort of part-time and not much else. And then, the growth is never linear. So it gets away from you and then you got to try to catch up and then it falls below where you wanted to be and then you need to catch up. So we also knew that as I said, we didn't want a lot of people involved because we knew that we had to be able to scale this operation. And so the first set of venture capital was really just to hire 2 tech guys. two technical people to build a second version of the platform.
Yep.
And then once we knew it was working, because we knew that this was a truly world first idea, our risk's a little bit different to many others. Ours was around offshore competitive risk. When people start to see and hear it and feel what we do, it's very, very rare for someone to say, well, that's a stupid idea. Most people go, oh my God, that's so cool. I want to do this. Why hasn't this been done before?
Yes.
And I can't answer why it hasn't been done before. I can tell you it's not easy. But our bigger risk was more, well, if we're not first and fast, we're going to get run down.
Wow.
And so we're trying to go to venture capital investors and say, we need capital to scale this thing.
Yep.
We are doing it and it's working. We now need to be able to expand into other countries, because as big as Australia is and as dominant as we are in agriculture, we're absolutely tiny.
It's pretty small
in the global sense.
Yeah.
And funnily enough, we were lucky. We got some investment from a venture capital firm, early stage venture capital firm here, called Investable in Sydney, after being rejected by many firms. Most of them didn't understand the concept.
Wow.
Most of them, I mean, I'm pretty cynical with VCs in Australia in particular. I probably shouldn't say that on this sort of forum, but it feels that your whole idea is being judged by some 20-year-old in a t-shirt who's got no business experience, because that's what it feels like talking to a VC sometimes.
Wow.
Is the market big enough? How are you going to be able to do this? And you're like, is the market big enough? Every person in this world has to eat.
Yeah.
Do you know what I mean? You don't get much bigger than that. And so we look at that problem and you're trying to define the problem. And that's the thing with venture capital. A pitch deck is not as complicated as people make out.
No.
What you're trying to convey is there's a big problem. You should care about it. We've got a solution to it and a team that can deliver it. If you give me money, this is what the future will look like.
Yeah.
That to me is as simple as it is with a pitch.
Yeah.
But if you can't get past the problem, in other words, if someone looks at it and goes, I don't understand the problem, you're never going to get through the rest of it.
Yeah.
So when you're dealing with people in Australian VC in particular, venture capitals, they don't understand farming. They don't understand agriculture. They don't understand why this is a problem. Whereas with Investable, the two founding principles came from farming backgrounds. So it took me seconds to be outlining the problem and they went, we've lived it.
Whoa.
Our family understands this problem. In fact, I get your solution. Where do we sign? And that group, they invested within weeks of initial, like full money in. That's unheard of because they got it.
Wow.
And then, they gave us enough capital to bring in just a really small team. And then we started to do, as I said, we started to test some marketing and we turned it off within 2 months because it had exceeded all our expectations and we had to stop. And that gave us our next problem, which is how do we keep up with supply?
Yeah.
Because we want to be able to work with good farmers. We needed to also refine our value proposition of farmers, because what we are not, and we're very clear on this today, is we do not provide high interest finance to farmers. We don't lend money to farmers. We don't provide loans. We don't invest in their farm. We don't invest in their business. And these are all constructs that weren't really understood in farming. Farmers go, hang on, I borrow money from the bank. So are you just an alternative to borrowing from the bank? And so we've had to refine our position, saying, no, this is not necessarily about money. What we provide farmers is risk-free capital.
Yeah.
In other words, we provide them capital that responds to the season and the variability. They only repay back the value of the crop, the value of the harvest, the value of the livestock. And so being able to convey that clearly and succinctly and consistently to farmers was something we had to work on, because we have no interest in working with desperate farmers. We work with good farmers, and good farmers are good business people, and they understand what value we deliver. And so, there were real challenges of how do you onboard a good farmer, and then you put a program forward like, hey, we got 1,000 hectares of wheat. Everyone want to buy, bang, gone. And you go, oh no, I need to go find more. So because we're dealing in real assets, they're finite and they're seasonal.
Yeah.
Like we can only invest in what exists. And so that was really a challenge for growth and why we had to sort of stop. And then we also realized we needed to go get more money. And so we had to go through another round of raising capital a year later, but at least this time we had more evidence of the traction we had done.
And you'd had existing investment as well. So that would have helped the conversation with, did you go VC again?
We did. But interestingly and excitingly, almost all of our capital came from offshore. Wow. So we didn't bring on any real new Australian investors. What I'm so excited about is we have 4 overseas agriculturally focused venture capital funds invested in Idea.
Wow.
So our raise was led by a company called AgFunder. They're one of the world's leading agricultural VCs. They're based out of the US and Singapore. We got investment out of a large agricultural company in New Zealand. We got it out of an ag-focused VC in Japan, and we got it out of a smaller one out of Singapore.
Wow.
And so, again, I'm cynical on Australian capital is that we were very easily, I shouldn't say easily, it's not that easy. We attracted really good capital from offshore experts in ag who said, we love this concept, you need to bring it to our market.
Yeah.
So each of those investors from offshore wanted a seat at the table.
Yep.
They said, we get what you're doing. This can work all over the world. This can really transform farming. And so we're going to invest in this concept. And so that only happened about 5 months ago. We closed that raise. And now it takes our little regional business sort of to the world. So we're in the process of launching in New Zealand. I'm in Canada and the US next month, meeting with some partners over there who want us to launch it there. We're trying to fend off the timing to launch it into Japan because we don't understand the market. But we do know that the Japanese riding on a bullet train would love to own a Wagyu.
You better believe they would.
Yeah. And like we've invested a lot of money in things like specialty melons in far north Queensland.
Yeah.
Those crazy yellow ones that sell for about $100 each in Japan, and they're all exported to Japan as well. So
whoa, that is such a good fit.
Yeah, it is. If there's a story behind the production, it helps as well.
Yep.
So yeah, I mean, look, there's been an undoubted level of challenges. There's always challenges, but we're really buoyed by the quality of our investors and our shareholders and our idea. And the unfortunate thing is it's not Australian money for the most part because it's hard to find and it's hard to work with here.
Wow. But it must be so validating. Like, it sounds like I haven't had really any dealings with Australian venture capital, but it sounds like they might catch up,
Don't get me wrong. Like, there's some great people in the venture capital space. I'm really grateful for the support of LaunchVic. LaunchVic is a great supporter of the ecosystem, and as a regional startup, they've been great supporters of us. My comments around VCs primarily relate to agriculture and ag tech. I put it down to if they don't resonate with the problem, they're not going to appreciate the solution. And ag tech, there is great VCs in Australia, but they are really focused in specific areas. And unfortunately, I think there's just not enough dedicated capital for Australian ag techs here. It is hard, and unfortunately, it's shown that offshore, where we got our investors from, want to take what we do everywhere.
Wow, it's pretty interesting because I know ag tech is a massive focus for LaunchVic at the moment and the other ecosystem. So it's really interesting hearing from ag tech founder about the journey and the challenges that are represented in funding in that area here. But I'm interested in like the supply side of things. Australia, massive, you've already said like $100 billion on its way to $100 billion industry, right, in Australia. What percentage of farmers and farm produce have you worked with? Like, what's the gap in your, what would you classify what's the total number of or percentage that you've reached of great farmers that you want to work with?
It would be tiny, almost inconsequential.
Wow.
What's exciting is the breadth of farmers we work with. We've worked with farmers in every state of Australia and into New Zealand, and it's the diversity of what they grow, where they grow it, and what their business is. So, we work with small beekeepers, oyster farmers, large horticulturalists, vegetable growers, cattle farmers, from the far north Queensland, as I said, down to Tassie. And they could be large corporates turning over tens of millions of dollars on their farm, or they could be small family farms. So the diversity is really what excites me because, ultimately we're sharing the farmer's story. We're exchanging capital for a story. We'll invest in what they grow. It makes life easier for a farmer. Often then, we like to understand what a farmer intends to do with the capital, although we don't dictate what they do with it. If we want to invest in some of their cattle, often they'll use that money to buy more cows and increase their capacity on their herd. So that's really the key for us with farmers is we help them grow their operation, grow their farm, but take less risk because they can deploy capital, and ours is consumer source capital, to plant more, grow more, do more, but not be so concerned about if the season turns against them. And then for our average investor, so for our consumer, because we encourage diversification, the average investment a person makes in a single, let's call it share farming program, is usually about $500.
Okay.
And so like we had a catastrophic event in far north Queensland last year with Cyclone Jasper.
Yeah.
We had invested a fair bit of, and we're back there again this year. We're in melons and avocados and pumpkins. And right before harvest in December, they got wiped out by the cyclone. You know, it was the earliest cyclone to hit that region in decades.
Wow.
One of the farmers received 3 meters of rain in just over 2 weeks. Nothing's going to survive that.
No
that's
way.
an extraordinary. That's like to the roof of here, and
Plus.
everything was lost.
That's wild.
The farmer lost hundreds of thousands of dollars of production and their livelihood in a lot of ways. But we softened that blow because if there's no watermelons to pick and pack, there's no return to our investors. Now, that sounds crazy for our investors going, I lost all my money. But the average person only lost a few $100s.
Wow.
Collectively, it was a material loss.
Yeah.
But the most perverse thing here is that same weather event, so that same cyclone that hit far north Queensland, dumped a heap of rain in Queensland on inland, that led to really significantly improved conditions for livestock farmers. And so you saw livestock prices jump around 30% within a few weeks. So our diversification strategy really came to its own.
Wow.
We got hurt on one thing and we got picked up on another.
Wow.
And so it's all about spreading that risk.
Yeah.
And so for someone, like when we set up IIF, we wanted to make it as accessible as possible. We didn't want it to be the constraints of the high net worths investing hundreds of thousands of dollars. We wanted people to be able to invest $100 and really build a nice, diversified, interesting farm for hundreds, if not $1,000 or $2,000.
Yep.
And that's really what we set out to do right from the outset, because we have to encourage diversification.
Yep.
That, last year was a horrendous year for livestock. Sheep and cattle prices this time last year were in the doldrums. This year's a phenomenal year for it.
Yep.
So, if you bought the cattle last year, you're singing this
Happy
year.
days.
You bought them 2 years ago and sold them last year, you weren't so happy.
Yeah.
But we're all about these sort of marginal returns to our investors that over time deliver them a really good return. But most importantly, make investing fun.
Yeah. Yeah. And I love how you've done that, even from down to I signed up for Invest in Your Farmer today. So I'm a member, which is great. I downloaded the app, and the interface is really, really cool. It reminds me of like a farming app, like a game, where you've got that little gamification logo almost of like the little square plot of land with farm stuff on it. And you're like, right, I'm going to build a farm in my pocket. How cool is this? But instead of like a pay to play game that sucks all your time and you're just like there like growing fake things on your game, you are literally impacting someone's livelihood and investing and getting a return on that yourself. And so you're building value.
Oh, precisely. I mean, we see it as an investment with meaning. And we work really hard on the user experience because we want it to be fun, we want it to be engaging, and content's key on that.
Yeah.
But there's two elements to the content strategy, for instance. So we insist on farmers having to provide regular check-ins and regular updates. We say to a farmer that just because it's risk-free capital doesn't mean it's free.
Yeah.
The cost is the updates. But they don't just drive education and awareness. In other words, look, if you've invested in a lamb, for the first time in your life, you're going to care about what lamb prices look like.
Yeah.
Or you're going to start to understand about weight gain and yields. Did you know an apple tree yields 25 kilos worth of fruit worth $1.10 a kilo on average? You will when you invest in them.
Yeah.
And you'll be tracking along and going, did I get my 25, 26, 27, 22? What's my yield? Because that's what your return is based on. So the updates, the photos, the videos that come through regularly all the time, the more diverse your farm, the more regular your updates.
Yeah.
But they are also about managing expectations.
Yep.
Because when things start to go astray, like if you have a flood or a disease or something happening, we need to be communicating that. Like we can't just get to the end of harvest and they go, oh, sorry, shit season. You go, whoa, what happened? Like, so along the way, you've got to say, oh, how's it all going? Okay, it's getting dry out there. Feed levels are dropping. Weight gain's falling. All right, the farmer might have to hold them a bit longer because your return is what they're growing.
Yeah.
It's not, as I said, it's not lending money to a farmer and saying you got to pay me back.
Yeah.
It's like, you got to grow that, Mr. Farmer, you got to grow that cow for me. That's mine.
Yeah, wow.
You're going to grow it like your own, with your own. And because the returns are variable, education is key.
Yeah.
We really want to be able to build empathy and awareness. And that's really important, especially when, when the season might turn against you in a single crop.
And you talked percentages before about, the 8% of your $10 investment got an 80-cent kind of return, right?
Yeah.
I'm interested, what is from an investor who goes, I know investing, I invest in stocks or whatever traditionally, and I'm looking for something around like long-term, something around the 8% would be wild. That'd be great. What are we talking in terms of IIF at the moment? You haven't got a massive long history to say over the 10-year period, right? But what does investment percentages and return percentages look like? And how much do you communicate about that?
We do. I mean, we're big believers in transparency. So every single trade we've ever done is available for anyone to see. So every member can see every trade, every update, and every outcome. We don't hide from that. And we don't deal in financial years either. So like we say to people, it's not a financial return, it's a season.
Yeah.
Like you've got to think in seasons, not financial years.
Yep.
And the other thing that's really interesting in coming home today is that just how uncorrelated agriculture is. A cow doesn't care what happens on Wall Street. It's going to eat grass regardless.
Yes.
And so it's a totally uncorrelated investment.
Yeah.
But in saying that, we target between around 10 to 20% as a return objective on our trades.
That's
if
amazing.
it gets above that, we worry that we don't understand the risk. And if it's below that, we're probably not willing to take the risk.
Yeah.
Now, in saying that, we've had about 120 individual programs mature and return capital back to investors. It's running about 85% are positive and about just under 15% are negative. We think about an 80%, 8 out of 10 will be successful, 2 out of 10 will be underwater.
Yep.
Now, the average positive return is about 16% annualized, but the average loss is around 30%. Now, so you lose far less often, but right now, in our experience, the losses are greater than we would have liked. But overall, we've delivered about 11% average to investors.
Wow.
But, so we've had, it's all about diversification because we can't predict it.
No.
When you buy something today or you're growing a crop, you do not know what's going to happen in 9 or 10 months.
Yeah.
All we say to people is do not put all of your eggs literally in one basket.
Yeah.
Diversify because a good season will occur on one crop and a bad season may occur on another, but through sheer weight of diversity. And when we say diversity, we talk about geographical diversity, we talk about sectoral diversity, we talk about farm diversity, and I would spread your risk because each of these farm commodities will respond differently. The biggest determinant of performance is weather. And so, the weather impacting North Queensland is very different to the weather impacting South Australia. Oysters, for instance, are great drought hedges. Oysters don't like fresh water. They live in the water, but they need salinity levels to a certain level. So dry drought, oysters will thrive. So there's all sorts of different things that you can, you want to learn about.
That's so cool. So the cool thing when you're talking about uncorrelated, it's like, we saw a big drop in the share market not too long ago. And look, I don't follow current events to go, oh, that did that. But like Trump did something and, big share market impact is pretty much as far as and that could be completely wrong. But world events happen all the time. Political events happen all the time, and they're going to impact the stock market, for example. And I love what you're saying. It's so true. The cow doesn't care if Trump wins or not, and he's not going to eat less grass because of it. That is so cool. And I love the other element of this that's just blowing my mind is that you can have such, a season for. You're gonna be able to tell me more about what gives a short season, what's a long season, right? So some things grow real quick, and you're going to get a return in a much shorter period. And then say a cow, for example, it might take a year or 2, 18 months.
I mean our investment, because we're investing in growing cycles, they typically range from around about 4 to 5 months to 12.
Yeah.
So if we're investing in, say, shallots, and we've invested a lot of money in shallots growing in Queensland as an example, they'll plant, harvest and sell within about 4 to 5 months. So you're in at the start, you're covering the farmer's costs to sow it, to grow it and to harvest it, and your return will be when it's sold. Now, you don't know what yield you're going to get. You don't know what price you're going to get. You're hoping it's going to be a good season. But up until livestock, so if we're buying cattle, then normally it would be no more than 12 months. If we're doing feedlotting, it might be 5 months. So you're not investing for, say, 3, 5, 7, 10 years.
Wow.
Because you're investing in a growing season and a growing cycle. That's truly what's globally unique for what we do is that, yes, there's ways to invest in farming, but it's always to buy the farm, run the farm. We're like, we don't want to buy the farm, which means we can work with any farmer. We don't own your land. We don't invest in your business. We just want you to grow some crops for us amongst your own. And if you do a good job, we'll reward you from it. So, the average investors, the average hold is about 6.5, 7 months across everything.
Wow. That's amazing. I'm interested in what feedback you're getting from farmers. Like, they will never have experienced, you said it's a world first. There's nothing else like this. They will never have experienced a real paradigm shift of, like you said before, I don't go to the bank. This is not a bank. It's not the same system. I don't go and borrow and then I know I'm going to have to pay you 20% back on the capital. It's like, what feedback are you getting from farmers? Yeah,
I mean, it depends if it's new or an old farmer. I mean, what excites us at the moment is that there's a number of our farmers that we're on our second or third season for, and they see us as a critical business tool now. Wow. We help them make decisions around what they're going to do. What's our stocking rate? Well, and they actually use if as an adjective, or an adverb. We're going to if some oysters, we're going to if some cattle, because it helps them do more on that.
Yeah.
But we've also had a real education around what is a good farmer and what is a bad farmer for us as well. And having to change that paradigm and that it's not a loan, because that's what a farmer's used to.
Yep.
But if you step back from that and you think, well, what is a loan? What is debt or credit? Well, it's an obligation to repay, and debt is stable and predictable. So it's a great source of capital for funding things like acquisition of new property or machinery. It's a terrible form of capital to fund agricultural production, because agricultural production by its nature is volatile and variable. And so if you use debt to fund it, you could be a hero in a good season and you're going to be at zero in a bad.
Yeah.
So for us, it's educating that it's not a loan, it's equity. Equity responds to volatility, but it's not equity in your land. So we've had to learn a lot about how do we communicate with farmers to ensure there's not a misconception around, well, your high interest finance, you're going to take half my profit. And it's like, well, no, you're going to share our profit that you probably wouldn't have had without us. And only if you make a profit, we'll shield you from the bad. So, the feedback has been really positive from our farmers, and it's testament to how many we work with on new and other seasons, or how many they refer to us. But we're not right for every farmer either. We've learned to distinguish between a good farmer and a bad farmer. I suppose in any business you're in, there's good people and bad people. We're really lucky. We haven't had many issues. With all honesty, just between you and I, we've only had sort of 2 farmers that have potentially tried to do the wrong thing and go rogue, and both of which we've successfully recovered our investors' funds through our strong legal standing. But the other thing we reflect on, our lessons in the last 12 to 18 months is, so we've had 15% of deals finish under where we would have liked them to be. So in a loss, it's a small number, but we still analyse those. And we sit back and think through every deal we do. If the outcome isn't where we want it to be, was it bad luck? Was it a bad deal, or was it a bad farmer? And by that I mean we've got a good farm. We've had good farmers. We've had bad luck. And by that it's like, we invested in sheep in WA and the price fell through the floor. Farmers were shooting them or selling them for $10. Wow. That's bad luck. There was a good farmer. The watermelons that we lost, that was bad luck. But then you look at a bad deal, and what we're saying on a bad deal is, well, we can refine from that. Did we overpay? Did we get the yield too high? What is our lesson? So we can think about, how do we structure the next time we do a trade in this area? What would we do differently? And then there's bad farmer. We got to avoid bad farmers. So we think about, we accept bad luck because it happens. And what we're doing is we're embracing the variability bag. So we accept bad luck. We manage bad deals and turn them into good deals, and we avoid bad farmers. So, I mean, that's to us is a really key lesson. And a good farmer isn't predicated on necessarily what they grow, where they are, how big they are. It's really understanding whether they understand the value we can deliver and whether they're going to engage well with us, and they're going to provide those regular updates and insights. Because if we've worked with some exceptional farmers that we've loved to work with and we haven't had a great outcome, we love rolling back in with them next year because they've been great to deal with and they'll have a good season soon. But if we get a sniff of a farmer, and usually the bad farmer would normally come in if they don't understand their own business or what they're trying to achieve. And so the way I look at it is that good farmers don't need the money. We know that because they've operated for generations without it. And even if they did, they're probably too proud to ask for it, because farmers are very proud people. And if they do ask for it, we probably shouldn't be giving it. So, those are some lessons from us now today, is we're sort of saying when we work with a farmer for the first time, tell me about your business. What are you trying to achieve? What's a good season look like? What's a bad season look like? How can we help you grow your operation? And often it's, I could put, it's been a great season. I've got 100 head cattle. I could carry 150. Great. We'll add 50. You can't lose now. You've got extra cattle and you didn't pay for them.
So good.
Or you want to plant a crop. If a farmer can't articulate what they're trying to achieve or why, then we probably shouldn't be partnering with them. And that's, there's some lessons for us.
Yeah, that's so good. Tell me a little bit about the workings of IIF. So what does the scale of team look like required to deliver the platform and manage the whole business? Yeah,
well, I like to consider ourselves very capital efficient, and we have a very small but strong team. So our team has just gone to 8 people.
Wow.
That's across everything. So we have a team of 4 in Mansfield now. We're really lucky. So there's 4 of us based in our little Mansfield office. So selfishly, that's going to be HQ forever, because that's where I live, and I have no intention of going to Melbourne. We have a team of 3 on our tech team in Sydney. And actually, these were people I had worked with for over 15 years. They used to be the core of a tech team that a company I used to run. And we have a marketing person on the Gold Coast. That's it. Wow. We have 1 farmer salesperson. We have a person who focuses on an educational product. So we have an educational version of IIF designed for high school kids. It's called IIF Ed. And it's basically the exact same proposition but used for high school kids with fake money. So everything that people can invest in in the real world with real money, high school kids can invest in with fake money. And so we just clocked over 800 students using that. We have schools right across Australia, and we've never really spent any focus on it. It's just a highly efficient. We see that as potential to be an ag program for schools that don't have an ag program. So we have a person focused on that. And so it's a really small team. I don't foresee our team growing beyond 10 in Australia in the next 12 to 18 months. And that's because we've set our systems and our processes to be highly, highly scalable. One of the hardest lessons I ever had was working for a company that ran out of money. And it's a precious resource capital, and I've seen what happens when a startup is underfunded. And so we're very, very focused on running an efficient business and respecting the capital we have available to us, and requiring as least amount as possible.
Yeah, I love that. Yeah, and those kind of lessons are hard learnt, right? Like I have had the challenge of cash flow a couple of times, and one time really big, and it was death's door for Hebron Films, and it shook up the way I saw, the financial workings of the business and how it needed to operate and how I needed to manage cash flow. But it made me so much better of a businessman, right? To be able and a manager to be able to scale to the next level and to be able to take on much greater projects, responsibility, and understand what it needs to look like on the finance side. You had a massive head start on the being a CEO previously and in finance. What kind of major lessons, other than ones you've kind of shared a little bit on so far, what other kind of major challenges or lessons did you have to learn, or challenges that did you have to overcome in building IIF to where it is now?
Oh, there's non-stop lessons. I think the hardest lesson I had was in my previous world, where, as I said, I worked for, or we ran a startup as one of those divisions that ran out of capital, and that was just coming into COVID. I'd left by that stage, but just have to respect it. You need to have real clarity in the strategy. You need to do less but do it better, and focus on the people and the A grade staff. So we got a small team, but it's an exceptional quality team. They're all A grade or A players. In fact, we just had to let someone go recently who was clearly not a lovely person, but we said this person never going to be able to be up to the grade we need. So that becomes a drag on the business. Yep. And so, focus on the people, be really clear on what you're trying to achieve. And then at the same time, be respectful of either your own cash flow, or if you're using someone else's who have invested in you, be very respectful of that as well. It's hard to find, particularly in the early stages. So that's probably my main advice is just keep setting set goals, deliver them as efficiently as possible, and set new ones. Like I said, over our 3-year journey from concept, the first objective was to solve legal and tax. We weren't getting ahead of ourselves. That was it. And once we had solved that, okay, well now the next one is to get to we had a marker, and we were focused on getting to that marker. And then the next one. So our journey now is that we're launching in New Zealand at the moment. So we've just been really focused on what do we need to get to in Australia. We really want to get to almost a cash flow break even on the Australian business, because as perverse as it sounds, if you can prove you don't need the money, people will give it to you. Yeah. So you kind of almost have to demonstrate that you don't need it in order to get it. Yeah. So that's what we're looking at on that basis, and trying to get a foothold into North America. So our objectives today say, what do we need to look like in 12 months to go and raise $20 million? That's an arbitrary number. I'm not saying that's how much we're going to raise, but we need to now be really clear that that's the picture we need to look like. So now all of our focus is to get to that objective. We can look beyond it, but we're not going to be able to deliver beyond it. So it's just almost like a distraction.
Yeah. Oh, that's really powerful. Two things. When we're talking about cash or capital, like it's either cash is oxygen for a business, right? And if you, what I'm hearing is that you, whether it comes through capital or cash flow, you had when you're talking capital, you can't let the expenses and the draw on that capital go lower than your income, or like run out before the uptick, right? In your return on what you're working on, right?
Yeah, and I suppose if you're a venture cap business like we are, and look, there's a big difference between being a small business and a startup. Like they're not the same thing. And so a small business, you're trying to be as efficient as possible to not bring external investors in, to manage off your own cash flow, and you're probably going to be a relatively localized business. Yep. A startup, you kind of got to throw that out the window. You've got long-term global ambition. You're going to need more money. Doesn't mean you don't treat it respectfully. But every time you do a raise, the way I look at it is you're looking at, well, what's our burn rate and what's our run rate? And so, you raise capital and you go, right, we have 24 months worth of money. And then if you say, okay, well, we got 24 months worth of money at our current spend, it takes 6 to 9 months at least to raise capital. So you're sitting there saying, well, I need to start from a venture perspective. I need to probably start within a year. So you might have 2 years worth of runway, but you really only have a year before you have to go and start that process again, which means you have to have made sufficient traction. Now, the hard thing is you can spend more to try to grow faster. But the reality is if you suddenly spend a little bit more, that 24 months becomes 23. Then 22, then 21, then 20. And then that actually brings what I'd consider like the solvency cliff closer. And so you have to make really hard decisions around like how much runway do I need to get to that next proof point? And how do I spend the right amount of capital to get there without compromising the funding cliff, if you will? Because, if you get within 3, 4, 5 months of the funding cliff, you're insolvent. As a director, you've got obligations. So it is a hard juggling act when you're a startup, and then your investors have invested for a return. They're saying, well, this has got to be. I want this to be a good business, and I want my exit in 7 to 10 years, and I've got to give my money back to my investors. So, it's a juggling act. Respectful of the cash, spending as much as you need to hit your objectives. Overshoot them where you can, but don't overspend, because all you're doing is bringing that inevitable crash closer. And most startups, they're going to fail because they run out of money.
Yep.
And if you don't deliver what you said you were going to do, your investors won't invest again.
Yep.
And so that's why, we've been on our couple of capital rounds, we've been really clear what we were trying to achieve. So to our first set of investors, we said, we want to hit 1,000 users within 12 months. And if we do that, will you give me more money? And it's not quite that simple. And they're like, yeah, okay, go do that. And so we smashed that out of the water. No,
Love it.
we delivered what we said. Can I have some more money? And then you go into the next one saying, well, here's our objectives. If you have confidence, if we deliver what we said we'll do, then people will give you more money. But if you fall short of that, then you're kind of scrambling and
love it. So this is where you're filling in so many gaps for me here, and it's super fun. So that's where we're talking about the break-even point in the Australian version of IF, break-even in Australia. That's the point where you are self-sufficient cash flow-wise as a business. Is that right?
We would be in the Australian context, but remember we only have 8 staff. So because we keep that cost relatively controlled, it's just about giving us flexibility and giving us options. We are not going to be able to reach our potential globally, let alone locally, without significantly more capital, because we're a scale business ultimately. If we don't grow, if we're not an Australian icon, farm in your pocket around the world, someone with more money who's going to copy our idea is going to come back at us. And so we know we're going to need more capital to grow, but that is not to grow our Australian business necessarily. It's to grow into our other international markets. And so, it's about being, as I said, respectful of the capital, making sure that you deliver to the best of your ability what you said you would deliver. And remember, every time you raise more money for a startup, you're diluting your own ownership as well. So you want to make sure that you're pushing that valuation as high as possible to minimize your dilution. So it's always a balance.
It's such a juggling act. It's like a real game of strategy, right? Where you're just like, if I do this, what is it going to do? And it's going to mean I have to do something else over here to mitigate that. And I have to, there's lots of chess pieces going on at once, right?
Oh, there is. And that's why you hope you've got good either advisors or investors or directors to help sort of bounce those ideas off, because, you can get deep into the operations, into your own business, and you can forget what you're doing and why. And so the why is obviously really important.
So what is the vision? We've talked a little bit about future plans going international, but paint the picture of where you want to see IF in, beyond your 12. I like how you say, we project for 12 months because, you could look beyond that, but who knows? But let's just play a little game here. Beyond 12 months, what is the dream for IF?
Yeah. Look, if I look at the Australian context, and obviously our focus is very much global in the next phase of our business, our vision is to put a farm in every pocket. And that means that's almost never ending, because we're talking there's billions of people in this world, billions of people who have to eat. And our mission is to build a mutually rewarding bond between producers and consumers. So, but in saying that, we're pretty modest in what our growth targets are. So we set a growth target, an average farm, because we call it a farm, not an investment portfolio, an average farm of $5,000 each. So if we could hit 100,000 member investors with an average farm of 5,000, we would be delivering $1 billion worth of consumer capital to the Australian audience. Now, if you magnify that out and thought, okay, well, if you can do 100,000 people in Australia who are investors on this, and look, we've passed 4,000 now, and we've barely begun. And so, hopefully you can start to see exponential growth and those numbers become attainable. But ultimately, if we could put a million farms in a million pockets, then that would be $10 billion of capital into Australia, into global agriculture.
Wow.
We're focused on particular countries. So because our system works, we don't lend money to farmers, we don't control or dictate to the farmer. It actually means that there's a number of only certain countries that we would work within our model.
Why is that?
Because we need to have it needs to be a country with good commercial farming systems and stable legal foundations. We need to be able to protect our interests. We wouldn't, for instance, invest into farming in Vietnam, Bangladesh, or Africa. One, because of the size and scale of farming at an individual level, and two, are we going to get our money back?
Risk.
Ultimately, very different risks. There's farming seasonal risk, which we embrace and we accept, and there's counterparty and sovereign risk, which we can't. We have to manage. So for us, our journeys, New Zealand, Canada, US, Japan, and Europe. That's sort of the countries that our model can work within. But you're talking billions of people across, a billion people across those countries.
Yeah.
So look, the scale for our potential is enormous, but we're still a little regional business with less than 10 people. So who runs the most diversified farming company in Australia but owns no land? So
I love that. I'm putting that right next to Airbnb and Uber. If so freaking cool.
Oh, potentially. I mean, we don't get ahead of ourselves, but our replication model has probably got more similarities to Uber than nearly anything. That when Uber comes to a new region or country, it needs riders and drivers, and the platform's easy. You can roll Uber out anywhere. We can roll our IIF app out to any country, but we don't need riders and drivers. We need farmers and investors. And so for us, it's just being really clear. The technology that we have is the easy part, but understanding the demographics and issues with the country and having a clear distribution strategy. But even before that, solving the legal and tax elements of individual countries is really what we're focused on today.
Love that. Let's just round this episode out with a little bit of advice from Nathan MacPhee at IIF to any other startup founders that are in any area industry. What things have you gathered, little nuggets of wisdom have you gathered along the way that you're like, this is so important to my journey and I would recommend that other people do?
Yeah, interesting, tough one. One of the struggles I think with startups and founders is they're often they'll want to keep it close to their chest. Like, I've got this great idea, I can't tell anyone because they'll steal my idea. The reality is you have to share it with everyone or they can't help you. And so, early on I had those sort of dilemmas, like who do I talk to? I don't want to tell people what I'm doing here because someone might copy it. But I would never have been able to succeed without the connections of the connections of the connections of the connections because, I wasn't from ag. And so I had to learn about ag, and it was the connections that people introduced me to, and then they introduced me to someone else and someone else that were continually validating, but refining the idea. So the key piece of advice I'd have for an early stage startup is you've got to share your idea, or no one's going to be able to help you, and you're not going to be able to do it without people to help you. Obviously, you want to be mindful of your protections and your IP and a whole range of things, but you can be too cautious when people are genuinely good, and most people will want to help, and even if they can't, they might be able to find someone who can. Like the chairman of our company today, as someone I didn't even know 3 years ago, I was introduced to through a connection to a connection, and he's just like, "There's something in your idea, I want to help." And he had great agricultural connections, and so from those early, if I hadn't put it out there and tried to explain what I was trying to do, I don't think the people who are helping us today would have been aware of what we were doing.
That's such great advice. I'm interested, you're only a few years into the journey of IIF and the growth of IIF. What concern do you have, or have you noticed any competitor activity? And is that at all concerning? Because you've mentioned it a few times of growing fast enough to stay in front and stay in the leader.
I think I'm always mindful of competitors, certainly not in Australia. I mean, there are ways to invest in farming, but they're much more traditional, by the farm, fractional land ownership, these kind of things that we do not do. Certainly haven't seen anything globally that we're monitoring, but that's probably our biggest. There's two big risks for us: really bad seasons that hurt investor confidence and competitive pressures offshore. So we're mindful of it, not necessarily fearful of it, but just mindful of it.
Yeah.
We know our experience shows it's not easy to do what we do.
Yeah.
And so it's not going to be easy for someone to copy,
Yeah.
but it's inevitable.
Yeah. And like anything that's successful, right? Like when I'm talking to people about potential ideas and they say, oh, it already exists. I say, well, that's probably a good thing, because that means that there's demand for what you're thinking of doing, right? Whereas you, on the other scale, have had this idea, and while there's plenty of demand for farming, right? And there was plenty of demand, you don't have anything else to say, look, it already exists. And that, I suppose that gets back to the venture capital challenges, right? You weren't able to come to them and say, look, we're just doing one of these.
Yeah, and look, that was difficult. I mean, it's got its benefits, but it's got its challenges. So the first challenge was there's no one to copy. There's no precedence. We don't know how to do it. We've got to work out how to do it. And the second is because on the funding side, venture capital, they don't have someone to look at. Venture capital don't mind a fast follower, as silly as it sounds.
Yeah.
And so that's what you have to overcome. That gives you a defensive moat. And that's why if you excel at what you do, I mean, there's a reason why Uber's still the dominance. It's the way you describe ride sharing.
Yeah.
Even if you're getting in a DD, you're still going to probably call it an Uber. So people are going to follow. But if you deliver what you say you're going to deliver and deliver value, you'll always hopefully be the first at doing so.
I love that. All right, let's bring this to a close. If someone is just like bouncing off the walls right now listening to this and they're like, I want to help. Like this is remarkable regional business. There are going to be a lot of people listening to this that know plenty of farmers and they'll be like, oh, I know this guy's a really great farmer. Or conversely, they're going to be like, download me the app right now. I want to be part of this thing. How can people help in the growth of IIF?
I think you just outlined exactly right. Like if you know farmers who potentially we can help, again, helping them grow their business while taking less risk, or you're a consumer and you want to own a cow or a basket of oysters, then come to our website, have a look around, become a member if you're so inclined. We're small enough to still garner and love the feedback we get from both sides of our fence. Be part of the journey.
Yeah,
put a farm in your pocket. Make it a fun, engaging experience, and be part of the IIF family.
Come on. That's so good. Nathan, thank you so much for joining me today. You've blown my mind and excited me to invest in farming.
Thanks, Caleb.
Well, that's it for this episode. If you really enjoyed listening, why don't you drop a comment in the comments below? Make sure you like the video and subscribe to the channel so that you get updates on when all of the next ones come out. That really helps grow this little community of people that are diving into regional business and celebrating and learning more from it. So really appreciate your support, and I can't wait to see you in the next one.